Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Oil and Treasury yields rise after President Trump says the ceasefire with Iran is on, quote, massive life support. A rollercoaster ride, meanwhile, for the Kospi. Stocks in South Korea raised $300 billion in less than 100 minutes after a policymaker floated a citizen dividend using taxes on AI profits. Plus, the rebellion spreads. More than 70 MPs, reportedly including cabinet allies, are said to have joined calls for Keir Starmer to resign as UK Prime Minister. We'll bring you the latest from Westminster. Well, a very good morning. Here is the picture in markets as they stand this Tuesday morning. They were already weakened by President Trump casting doubt over peace in the Middle East. Then came those comments on a potential AI dividend in South Korea, throwing a major spanner in the works for the Kospi. And that has created a dramatic reversal, not just for the Korean stock index, but contagion spreading across Asia. As you can see on the left side of this board, the MSCI Asia Pacific Index down 0.5%. Now, we've got futures pointing lower on both sides of the Atlantic as well. Will we see spillover in the tech space? Factor in the Iran situation and the tail risk of negativity in the Trump-Xi talks as well. So, a red picture across the futures and equities picture at the moment. Now let's flip over to cross-asset space, and you can see oil is higher on the latest in the geopolitics. Brent now trading at $104 a barrel. That keeping Treasury yields under pressure as well. 4.42 is where we trade on the US 10-year yield, and the dollar strengthening as a haven as we look ahead to US CPI, up 0.2% on the Bloomberg Dollar Spot Index. Now let's take a look at the risk events on the docket for today. At 9 a.m. London time, we get the German ZEW sentiment survey, the first indication, really, of business sentiment in May. Then at 1:30 p.m, we get US CPI data, the expectation being that it'll moderate from March's pace on a monthly basis, but staying hot, as you would expect, given the war in Iran. And then today, later on, we'll be hearing a bit of Fed speak from John Williams and Austin Goolsbee. So plenty to bring you. Let's set you up for the day ahead. We begin with earnings breaking out of Germany. They are from the renewable energy company Siemens Energy, and the notable line is that they have accelerated the share buyback this fiscal year. They have done this given the surge in data centre construction that boosted orders last quarter, and so it's being accelerated by an additional up to €1 billion. Now, they're going to raise the purchasing target for the period by 50%, but of course the backdrop is this power-hungry data centre build-out, that benefiting the company. So net income soaring 67% in the fiscal second quarter, orders jumping to a record on this data centre boom. I'll be speaking to the CFO of the company, Maria Ferraro. That conversation coming up in just a few minutes, so don't go anywhere. But let's turn back to these broader markets now and the really shocking moves that we've been seeing on the Kospi, reeling really after $300 billion in value vanished in just 97 minutes. Let's get more on that flash sell-off with Avril Hong in the region for us. Avril, what are you seeing?
Well, it's that focus on the South Korean markets. As you say, this has been the market that's front and center amid the AI rally, and today it had quite the roller coaster ride. I like the way our MLive colleagues put it. In the time it takes to watch a football or soccer match, about 97 minutes, $300 billion worth of market cap was wiped out. Now, flip the board. Let's talk through the culprits. We had the Kospi at one point losing 5%, as did the chip giants that have been leading the way higher amid this rally. They also declined by the steepest since early April, and this was no thanks to a Facebook post from a top Korean policy maker suggesting a citizen dividend from AI tax, which was later clarified to not be a windfall tax, but the damage was done. And I think today's episode really highlights a couple of things. How policymakers of economies that have been benefiting from the AI boom are under a lot of pressure to redistribute these gains but also specifically for South Korean markets, the concentration risk, how crazy this rally has been, and how retail-driven it is. Of course, we did see a bit of that contagion, as you alluded to a short while ago, on the Japanese benchmark, which flipped to negative at one point, flipped the board. Let's take a look as well at what else we're watching out of Japan, because Besson, of course, is making his way through the region. He met with the finance chief earlier today. He's set to meet the Prime Minister later. So far, nothing in the way of clear signals of direct coordinated FX intervention, so maybe disappointing some that had been expecting some of those signals. We're continuing to see dollar-yen moving even further away from the 155 handle, and of course this follows on from the suspected bouts of intervention last week. Lizzie?
OK, we'll be diving into all that speculation around yen intervention later on in the programme. But for now, Avril Hong in Singapore, thank you very much. Well, we have seen oil prices rising, meanwhile, as President Trump cast doubt over the ceasefire with Iran after rejecting Tehran's latest peace offer, prolonging the effective closure of the vital Strait of Hormuz.
Right now, it's on life support. They understand these are all medical people. Dr. Oz, life support is not a good thing. Do you agree?
Bad prognostic.
I would say the ceasefire is on massive life support, where the doctor walks in and says, sir, your loved one has approximately a 1% chance of living.
Let's go to the region now. We can speak to our Bloomberg Horizons Middle East and Africa anchor, Germana Basechi. Morning, Germana. Just talk us through what's looking more likely from here. Is it more military action or a diplomatic solution?
Well, you heard some of the perhaps hyperbolic language coming through from President Trump yesterday, describing the ceasefire as being, as quotes, on life support. He also characterized Iran's counterproposal as being also, quote, piece of garbage. I will just tell everybody that the ceasefire is technically still holding up. And yes, it is fragile, but technically we still are in a state of ceasefire. But the question, as you say, is where we go from here and whether there still is hope for a diplomatic breakthrough. President Trump also indicating that Iran had signaled their intention to hand over what he describes as the nuclear dust. We have had no formal confirmation from Iran that that is indeed the case. But we are gearing up for a key week. We have that very high-level summit taking place between President Xi and President Trump in China. China, of course, have been playing an active participation role in terms of backdoor diplomacy. The Chinese foreign affairs minister met with the Iranian foreign minister last week. And of course, China economically are one of the key countries that have been impacted by the effective closure of the Strait of Hormuz. So we'll see whether out of that meeting, and we know that Iran is going to be discussed, whether there can be another big push on the diplomatic front. At the same time, when you talk about the potential resumption of hostilities, it seems very unlikely that the U.S. would go down that route even before the summit or around the time of the summit. We know that President Trump has once again been briefed by his senior military officials about potential options should they want to go down that route. But for the time being, I think it's fair to say that we are once again in wait-and-see mode. Both sides are positing that their stances are non-negotiable, but ultimately any negotiation, as anyone in diplomacy will tell you, will entail give and take and a little bit of compromise. And the question is how much pressure is going to be applied on both sides in order to get to that breakthrough or indeed resort back to hostilities. So we will see over the coming days.
Germana, thank you. And later in the programme, we'll also dive into what else is on the agenda for that Trump-Xi meeting. But for now, Germana Basechi, appreciate the update. Well, the mounting pressure on Keir Starmer, the UK Prime Minister, is set to be in focus for bond traders when gilts begin trading this morning. Yields moving higher in yesterday's session, tracking all of the uncertainty around the PM's future. Let's bring in Ven Ram now, Bloomberg MLive strategist, who is watching these gilt moves tick by tick. Then we saw gilts rising yesterday, gilts dropping, yields rising yesterday despite Starmer's speech. Really a plea to get more time from his MPs. Schroeder's actually saying steer clear of UK bonds for months. Do you have any hope that yields will come back down? Do you see any path towards that?
Not in the near future, I'm afraid, Lizzie, unless we get
a new chancellor. Of course, this is all speculative, Reem. We don't know whether Starmer is even going to step down. But assuming he does step down, and if we get a new chancellor, who is even more fiscally minded than Chancellor Rachel Reeves has been, then yes, yields will come down. But short of that, I think that the path of least resistance is for yields to climb higher from here. Already about 1 in 10 pounds that Britain spends, it goes to debt servicing. And if those costs, if there are suggestions that interest payment cost is going to mount even higher from here, I think there is no way that gilts won't sell off. And for the moment, if the market reaction has been contained, it's because the markets don't yet know how this is going to play out, whether we will get a new chancellor. We don't know any of those details, which is why the markets have been holding back and which is why the pound has been resilient to a degree. Now, what is interesting, Lizzie, is that since the time that Rachel Reeves took office in 2024, the 30-year gilt yield has surged 100 basis points. That is twice as much as the increase we have seen in treasuries, comparable treasuries. So the markets are already, the yield on 30-year gilts is already the highest since Tony Blair, the Labour Prime Minister, was in power. So I think that the cabinet shouldn't want to incline towards a new dispensation. That means even more fiscal austerity is sacrificed.
But of course, as we can see on the screen, the Polymarket odds show that Andy Burnham, the Greater Manchester Mayor, is leading the betting odds to replace Keir Starmer. And this is the man who once said that we shouldn't be in hock to this bond market. So let's see how much the rest of the Labour Party cares about what the bond market thinks, Ben. I also just want to get your view on the US, because we've got CPI data coming at 1:30 p.m. London time. At what point do you see higher oil prices derailing the stock rally?
Well, I will come back to you on that one, but I wanted to say, as far as the hawk in the bond market is concerned, I think that, when the bond market sneeze, everyone has to pay heed, and that includes everyone in Downing Street, whether or not they like it. As far as this oil prices and stock rally, we are supposed to get a CPI reading that is supposed to be ticking higher today. And I think that if that happens, the markets will start to question, look, is the Fed going to be able to raise rates? And given all the oil price rally, I think that, the equities are going to be actually okay for now, because you've got this big AI boom. Earnings revisions have been huge, positive earnings revisions. So I think that the fair value of NASDAQ, as we have discussed before, Lizzie, is 30,000. And I think that NASDAQ will find that one or the other way to get to that level in a few months, I'm convinced. But I think that, it's more the question for the bond markets here. What is going to happen? Is the Fed going to be able to cut rates as Trump wants them to cut rates? I don't think the answer is yes, and we'll find out in good time what happens.
Ben, thank you very much. We'll look forward to that data. That's Ben Ram, Bloomberg MLive strategist, standing up for the bond market this morning. Well, still ahead today, we'll be live from JP Morgan's annual Global Markets Conference in Paris, where CEO Jamie Dimon will be speaking to our very own Francine Lacroix. Stay with us for that interview at 2:45 p.m. London time. But up next, right here on Daybreak Europe, we'll be speaking to the Siemens Energy CFO, Maria Ferraro, off the back of their results as the German company accelerates its share buyback. We'll get more on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:15 a.m. here in London. Well, Siemens Energy is executing its planned share buyback faster after a surge in data centre construction boosted its orders last quarter. It told investors this morning that it's raising its buyback target for the period by 50%. Maria Ferraro, Siemens Energy CFO, I'm pleased to say, joins us now. Good morning, Maria. Welcome back to Daybreak Europe. So my understanding is you're accelerating the buyback. Do you also plan to expand it further in volume?
Well, first of all, I would like to say, of course, that acceleration of our buyback is on the back of a very strong Q2 and half year for us. We're very pleased with how the year has gone, whether it's our orders, which are up 30%, our profit is over 11%, And of course, as you mentioned, our very strong cash generation, which for the quarter stood at $2 billion, but for the full half year was at $5 billion. So on the back of that, Lizzie, you're absolutely right. We have indicated that we will continue to repurchase shares on the back of our share buyback program, so accelerating that by $1 billion for this fiscal year.
So the AI hype really is fueling this data centre build-out. That's benefiting you because it boosts demand for your gas turbines and grid equipment. I wonder how many of your gas turbine orders are now coming from data centre orders?
Well, and this is what we've indicated quarter over quarter, that of course the demand is very strong regarding AI and data center build out. And that's really structural in nature. Like we said, it's not a cycle per se, but really structural, and it goes broader and deeper. And that's why we upgraded our guidance this year, because both not only on gas, but also on our grid technologies business, we're seeing that really positive market momentum. And it's really because of increase in electrification, whether it's grid stabilization, grid expansion, also looking at that base power. Here we're seeing tremendous market demand, and hence why we've upgraded our guidance on all major KPIs, from revenue to profit to cash.
But I wonder how sustainable that build-out really is. Are you not concerned that if the AI bubble were to burst, let's say, then data centre growth could collapse and you would see cancellation for your gas turbine orders?
Yeah, no, Lizzie, this is something, of course, we're watching, but we haven't seen that. And when it comes to demand, like I said, it's more structural in nature. It's really about how do we look at these digitalization booms and electricity needs that are required as a result of that. And what we see here at Siemens Energy is really clearly demand going well into the end of the decade and into the next decade. So therefore, it's really now about conversion, because the demand is there. We're sold out in major parts of our business until 2030 and beyond. And now it's about converting those orders into revenue, revenue into margin, and margin into cash. And hence why we upgraded our guidance this year. So really, it's much more broader and structural in nature.
So on the flip side, do you have any concerns about execution risks, given just how high demand is for your orders?
Yeah, it's a great point. And of course, with such demand, of course, we talk a lot about selectivity and ensuring that we're able to execute on those orders. One of the things that we've done is we've announced our expansion in light of that, really to ensure that that backlog can be converted and executed. And those plans are going well as planned. And of course, we look at supply chains very closely and ensuring that that's secured for our backlog. And this is something that we do on a continual basis. So, of course, it's something we watch very clearly and closely, but it's something that we've secured for our backlog that we have today.
Yeah, I think you've said you're spending 2.5 billion euros in capital expenditures this fiscal year. Where regionally are you spending that money, and what are you prioritising when it comes to spending it?
Well, we're prioritizing our expansion across gas and grid, but predominantly in grid. And one of the key areas, we announced over $1 billion in CapEx spend and investment in the U.S. And we've also announced 2 additional facilities there for our grid business in Charlotte and also in Mississippi, in Jackson, Mississippi. And this is really looking at how do we ensure that we're able to meet the local demand there for large power transformers and switchgear. So again, we're very excited about that market, and we see that those moves are necessary to really ensure our local footprint.
Maria, just finally, your transformation of industry division reported fewer orders than in the second quarter last year, I think. Which segment within the division saw the sharpest decline? Can you tell us why that was happening?
Yeah, I mean, Lizzie, that's really on the back of some of the, let's say, Middle East conflict, some of the turbulence there that we're seeing. But I want to be very clear. It's more timing and shifts of orders versus real, let's say, losses per se. So we see some shifting into next year. And last year for Transformation of Industries, they had a very strong quarter. So it's also a comparability issue. But what remains clear on Transformation of Industry is that they continue to deliver quarter over quarter with 12% profit this quarter. And that's what we see of all of our businesses, really stringent, laser-focused execution. And hence, again, that's what we see in Transformation of Industries, and we're quite pleased.
Maria, really great to get the detail behind the numbers from you this morning. Thank you so much for making time for us. That's Maria Ferraro, Siemens Energy CFO. Thank you very much. Well, coming up on the programme, Cyril Ramaphosa rejects calls to stand down over a robbery at the South African president's farm in 2020. We'll dive into the details next. This is Bloomberg.
I think the overall understanding is that, Putin is in a weaker position than he has ever been before. We see they are losing on the battlefield a lot of lives. There is growing discontent in the Russian society.
EU Foreign Policy Chief Kaja Kallas on the Russian invasion of Ukraine there. Well, now to some other top geopolitical stories we're following for you this morning. Ukrainian anti-corruption authorities have accused President Zelensky's former top aide of money laundering. The agencies say they uncovered an effort to launder $10.5 million through a real estate project near Kyiv. The investigation is part of a broader embezzlement scandal involving the energy sector that led to Andriy Yermak's resignation back in November. Elsewhere, the US Navy says it will buy at least 15 Trump-class battleships over the next 30 years, expected to cost at least $14.5 billion apiece. It marks a deeper commitment to the vessels than previously revealed, with the Navy previously saying that it would buy 3, with the first arriving in 2036. And South African President Cyril Ramaphosa said that he would contest a report that criticised his handling of a robbery at his farm in 2020. That's after the Constitutional Court ruled that lawmakers had made an error 4 years ago when they failed to establish an impeachment committee to look into how Ramaphosa dealt with the theft of money hidden in a sofa on his game farm. Meanwhile, the president has rejected calls to stand down.
My fellow South Africans, while there have been calls in some circles that I should resign, nothing in the Constitutional Court judgment compels me to resign my office. I therefore respectfully want to make it clear that I will not resign.
And Kevin Warsh's nomination to the Fed has cleared its first Senate hurdle. Senators voting 49-44 on Monday evening to advance Warsh through a procedural obstacle with a confirmation vote set for today. A final vote to confirm Warsh as chair is expected later on this week. Well, those are some of our top geopolitical stories from around the world this morning. Let's take a look at the markets as they stand. As you can see, it's red across the screen for equities and futures this morning. We're already seeing the MSCI Pacific Index weighed down 0.5%. Most of the losses coming from Korea. The Kospi down 2.8%. This is on comments of a potential AI dividend in South Korea. So that potentially going to infect Europe and the US. Futures lower on both sides of the Atlantic. But coming up on the programme, US Treasury Secretary Scott Bessent in Japan to discuss currency policy. We'll get your latest on those talks next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Oil and Treasury yields rise after President Trump says the ceasefire with Iran is on, quote, massive life support. Meanwhile, a roller coaster ride for the Kospi. Stocks in South Korea are raising $300 billion in less than 100 minutes after a policymaker floated a citizen dividend using taxes on AI profits. Plus, the rebellion spreads. More than 70 MPs, including cabinet allies, are said to have joined calls for Keir Starmer to resign as UK Prime Minister. We'll bring you the latest from Westminster. Well, a very good morning. If you're just joining us, it's 6:30 a.m. here in London, and the markets look like this. Red across the screen. They were already weakened by President Trump casting doubts over peace in the Middle East. Then we had these comments on a potential AI dividend in South Korea. That throwing a major spanner in the works for the Kospi. A really dramatic reversal for this stock market. So we're down 2.6% as things stand, pairing some of the earlier losses. But as I say, $300 billion wiped out in under 100 minutes. And that contagion spreading across Asia more broadly. Will we see a spillover into the European session? We've got Euro Stoxx 50 futures down 0.7%, US futures down 0.2%, but we've got to factor in the Iran situation and the tail risk of negativity if the Trump-Xi talks disappoint as well. But flip over to the cross-asset picture, would you? We've got oil higher on the latest in geopolitics. Brent up 0.6% at 104.80 the barrel. That feeding into inflation concerns again. So Treasury yields still under pressure. We're at 4.42 on the 10-year. And the dollar strengthening as a haven once again, up 0.2% on the Bloomberg Dollar Spot Index. Right, let's turn to some breaking in earnings now. Out of Germany, this is the pharma giant Bayer, the redhead crossing the terminal, that adjusted first quarter EBITDA coming in at 4.45 billion euros. So a big beat on the estimate of 3.94 billion euros. Momentum for its key medicines really in focus here. Will we get some more detail on that? They are confirming the group outlook. They say that sales in the first quarter actually ever so slightly missed estimates, 13.41 billion euros. The estimate was for 13.49 billion euros. The first quarter adjusted EBITDA margin was 33.2%, actually beating the estimate of 28.9%. So shares barely budging year to date for this stock. Let's see if they react to these earnings. Now, turning to the front pages this morning, what do we have? The Wall Street Journal, first of all, leading on the US and Iran locking in a stalemate that's neither peace nor war. The paper saying that the two sides are far apart from a deal, but also don't want to resume fighting. Now, meanwhile, Les Echos out of France leading on the Middle East conflict as well, saying that US President Donald Trump wants to suspend fuel tariffs amid soaring pump prices. So, of course, one eye on the midterms later on this year. And finally, the FT splashing on UK Prime Minister Keir Starmer's future and whether his premiership can be saved ahead of a crucial cabinet meeting later today. Some awkward conversations likely to be happening around the table in Downing Street this morning. But you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which Terminal subscribers can find by going to DAYB Go. Well, staying with the UK, the atmosphere around Prime Minister Keir Starmer's cabinet meeting this morning likely, as I say, to be tense after mounting calls for him to resign. More than 70 members of Parliament are said to have joined calls for him to set out a timetable for his departure following last week's local election losses. And for more, I'm joined by our Bloomberg opinion columnist, Rosa Prince. So, Rosa, need you to get your crystal ball out for us now. We've had 70 out of 403 Labour MPs calling on the PM to go. Why did Starmer's speech fail to reassure them? And really, where is the pressure coming from?
I think the problem for him with his big speech yesterday, that he had set it up as something of a make or break. And if you do that, then you really have to deliver. And Keir Starmer isn't the best speaker. He hasn't got that soaring rhetoric that might change people's minds. And he also didn't have much in the way of policy to really divert his own MPs and say that things were going to be different. The elections last week were so bad, and he didn't give them anything really to hang on to make them think, well, if we stick with you, then next time there are elections, which will be the general election in 3 years' time, we can go on and win. So I think he really lost the confidence of a lot of his party. And throwing forward, it does seem to me that we are now in the end game stage. It's bad enough to lose MPs, but he began last night to lose some junior ministers and even perhaps the cabinet. So, yes, it's the regular cabinet meeting. It's not a special one, but it will be a special one because I think they will be discussing those final stages of how the premiership ends.
So how fast is this going to happen, Rosa? We've had talk of an orderly transition by September to Greater Manchester Mayor Andy Burnham. Do you think that the likes of Angela Rayner and Wes Streeting will wait that long?
That's the big question. So a lot of that is in Keir Starmer's own hands. He could do something. We've seen premiers do this before. We saw it with Tony Blair. We saw it with Theresa May, where he could say, look, I won't fight the next general election. Well, that doesn't have to be for 3 years. So the question then would be, would his MPs, would those potential contenders, you named a couple there, would they be patient enough to actually let him stay in office for that long, for a year or two? Or he could say, I'm going to be gone by the time of the Labour Party conference, which takes place in the fall. I think that's the kind of discussions that they will be having today. Now, even if the idea is to kind of leave some space and time for Andy Burnham, the Manchester mayor, to return to Parliament, because remember, he can't run for the top job unless he's an MP, it's not at all clear that that path is smooth. Reform did so well last week in those elections. Is there anywhere in the country where Andy Burnham could stand and absolutely be confident that he would win? And I think there really would be chaos if the Labour Party make that kind of plan and then it doesn't come off.
Rosa, great to get your take this morning. Opinion columnist Rosa Prince, thank you very much. Well, turning to broader geopolitics now. Japanese Finance Minister Satsuki Katayama says that her team is working closely with US Treasury Secretary Scott Bessent on currency policy. The move signals a tacit US approval of Japan's recent suspected market intervention. We can get more detail now with Bloomberg senior editor Brian Fowler in Tokyo. Morning, Brian. So what can we take away from Katayama's latest remarks? Is it a confirmation of yen intervention?
Good morning. So first of all, let me just say that we know at Bloomberg that the MOF intervened in the markets because we looked at BOJ current account data a couple of days after the action, and we could see it. More than $30 billion spent buying the yen. Having said that, so far, MOF has not explicitly confirmed that they were in the market. And so looking at today's comments, I think it's clear that I think they did discuss the action. And I think what we can say is that they're emphasizing how closely they're communicating and how closely they're coordinating and how well that process is going. It means that in the talks, Bessent gave a nod of approval to the actions by MOF and supported it. And just remember, of course, Bessent in January took the unusual step of giving a nod to the New York Federal Reserve to conduct rate checks at trading desks, which is as close to intervention as you can get without spending money. So it's not a surprise, but yes, I think the two are on the same page, although no, they haven't quite confirmed it openly.
And what else is on the agenda? Was the BOJ something that came up? Of course, we know that Bessent's en route to China as well. Is that something they discussed?
Yeah, so a couple of things. So BOJ is, of course, very important. I think if you ask Scott Bessent, he would say that intervention alone is not effective in reversing currencies over the long term. And he would say it has to be combined with monetary policy changes. And he has said in the past that the Bank of Japan needs to have the room it needs in order to raise rates to fight inflation. It doesn't want to fall behind the curve, he said. So I think that came up as well. Katayama, when she came out of the meeting, didn't say so directly, but she did say the tools of monetary policy, the particulars, should be left to the Bank of Japan. So I think it came up. I think he made that point, and she reiterated to the market that that's where her stance is on that.
And of course, we know that Bessent spent a lot of his hedge fund career looking at Japanese bets, so this is familiar territory for him. Brian, thank you very much for the update. That's our senior editor, Brian Fowler. Well, meanwhile, the White House has confirmed that President Trump and his Chinese counterpart Xi Jinping will be meeting on Thursday morning in Beijing. Trump says that he'll raise arms sales by the US to Taiwan at those talks.
Do you think we should still be selling them weapons? The United States should
Well, I'm going to have that discussion with President Xi. President Xi would like us not to, and I'll have that discussion.
Let's get more now with Bloomberg North Asia economy and government editor Jenny Marsh. Jenny, what's the mood heading into this summit, especially given the setbacks that we've been seeing when it comes to the US-Iran talks?
I think there's lots of anticipation and then also modest expectations. This is a long sort of delayed summit. We've been waiting for this now since April. So it's very important for Xi and Trump to get together and to talk and to keep things very stable. But at the same time, so much has changed since they last met last year in South Korea. The war in Iran is casting a long shadow over these talks. You have Trump today talking about how the ceasefire with Iran now is on sort of massive life support. So any sort of big flare-up in sort of hostilities there would really be unfavorable to the Chinese. They want to be able to control this, to stage manage this, this visit by Trump, so that they're not going to want to see the Middle East kind of really sort of situation that's changing during Trump's visit. But I think overall, things are on track now, and people are just looking sort of towards the concrete and the deliverables of what actually the two sides can get done during this 36-hour visit Trump is making to China.
And Jenny, I mentioned that Trump says he'll raise arms sales to Taiwan in their conversation. How do you expect Xi to handle that?
Chinese leaders always bring up Taiwan when they meet with the US. It's their most their sort of top issue. It's the most sensitive issue. And Xi himself told Trump that he had to take the utmost care in arms sales to Taiwan when they spoke back in February. That was after the Trump administration had announced an $11 billion arms package to Taiwan, which was the biggest ever on record. So it's unusual for Trump to say that he's going to speak about this with the Chinese, because historically they've had this agreement with Taiwan. They will not discuss weapon sales, which they're legally obliged to provide Taiwan with China. But in reality, it is something that the Chinese want to talk about. It doesn't mean that Trump's going to budge on this. I think weapon sales are good for the US from Trump's point of view because he wants to sell more things. He's been encouraging Taiwan to pay more for its own defense, and selling them the weapons to do that sort of benefits both sides. It helps Taiwan protect itself, and it's good business for America.
Well, speaking of business, lots of CEOs will be flanking the president on this trip. The likes of Elon Musk of Tesla, of course, and Tim Cook of Apple, but notably not NVIDIA's Jensen Huang. Jenny, thank you very much for the preview. That's Bloomberg's Jenny Marsh. We're coming up right here on Daybreak Europe. Boeing CEO prepares for a crucial trip to China as the plane maker looks to land its turnaround plan. We'll get you the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:45 a.m. here in London. It's already been a rollercoaster session for South Korea's Kospi. Tech stocks dragging the index more than 5% lower at one point this morning after the country's presidential policy chief called for a dividend for citizens using taxes on AI profits. But we've seen those losses pare back somewhat after the policymaker said that he was not proposing a new windfall tax. Let's get more now with Bloomberg's senior strategist Neil Campling. Neil, I am scratching my head here. What is the difference between a windfall tax and a tax on AI profits?
It's a windfall tax without calling it a windfall tax, I think, Lizzie. Basically a way of making supernormal profits, as they will probably call it, as a way of creating a tax around this particular cycle. It's a strange idea in all senses, because these companies like Hynix and Samsung are investing themselves billions of dollars and in creating investing in the capex to create the chips that are powering the AI infrastructure. So the actual memory market in which they partake is very cyclical in nature. So whilst they're reaping huge rewards at the moment and enormous profits, that over the last 20, 30 years has not been sustainable through cycles. It is cyclical. There are times where their margins can be extremely high, 60, 70%, and they can also go down to the teens when things are tougher. So it is supernormal. It's not normal times at the moment in AI, but it also doesn't mean that they are going to be benefiting with billions of dollars of profit forever. in that sense.
OK, so as I say, I've seen the losses pairing somewhat on the Kospi. Meanwhile, if we turn over to the Nasdaq, futures down 0.5% this morning. A different market, but we've had some really interesting comments. A bearish warning from Michael Burry of Big Short fame, I might add, predicting a dramatic reversal for the Nasdaq. Should investors be worried about the big run-up in tech valuations when we're hearing this from Burry himself?
Yeah, I mean, I think what we've seen so far this year is the narrative changed significantly. There were concerns early this year in the capex spend being unsustainable, the returns on investment in terms of this capex being questioned as to when companies would see those returns. And then it flipped literally on a dime to everyone being super excited about the potential for AI and that down the road profits will be made. Now, Burry is making the point that the Nasdaq is expensive because he thinks that we are over egging, if you like, the earnings capability of these companies. So if we look at the Nasdaq 100 as an example, it trades on about 24 times price earnings. He thinks it's trading on more like 40 times because we're overinflating. So we'll have to wait and see what pans out. What we do know is that at the moment, the earnings growth of the Nasdaq 100 is about 30 to 35% over the next 12 months. So much higher than the actual earnings multiple. So for the time being, definitely the earnings supports the Nasdaq valuation. But we'll see how that plays out over, well, NVIDIA numbers next week will be a key test to investor sentiment, that's for sure.
OK, Neil, thank you for that. That's Bloomberg senior strategist Neil Campling. Now, just breaking across the terminal, we have earnings from Monte Paschi out of Italy. The bank reporting net income for the first quarter that beat the average analyst estimate. We, of course, have seen lots of drama around the CEO, Luigi Lovaglio, ousted by the board after he refused to step down, then brought back, but the fallout continuing after his reinstatement. Just diving into these numbers, net interest income in the first quarter coming in at €1.04 billion, a beat, ever so slight beat on the estimate. First quarter revenue €1.96 billion, again an ever so slight beat, and net income €520.8 million, which is a chunkier beat, the estimate of €507.4 million. Now, staying with corporate news, Boeing CEO Kelly Ortberg is expected to join the US delegation to China ahead of Thursday's closely watched summit between Presidents Trump and Xi. Today's Big Take dives into the plane maker's strategy as it lays out the groundwork for a successor to its 737 jet. We can get more from Bloomberg's Danny Lee on this now. Morning, Danny. So what's Boeing looking to get out of this trip to China?
Lizzie, good morning. So when you have the US and China disagreeing geopolitically and economically, it's Boeing, the US plane maker, where they do have common ground. And with President Trump's trip to China happening this week, the fact that CEO Kelly Ortberg, Boeing CEO Kelly Ortberg, had been given a coveted invite to this China trip, he is expected to help preside over a significant order, a historic order of around 600 aircraft that China may well sign up for. And it's not just the numbers involved, the 600 aircraft that China could buy, but also just the size of this deal, its magnitude, to help really lift this presidential trip and the kind of trade numbers involved. But we are expecting around 500 737 MAX aircraft to be bought and 100 wide bodies as well. But this really would be significant because Boeing hasn't won an order from China since 2017. So it will help shore up this drought it has seen on its order books and help really nail that turnaround story that Boeing has been seeking for the last several years, and particularly under new management with the likes of Kelly Ortberg coming in. So it is very significant. And with the help of President Trump doing all of this plane diplomacy, and with these kind of expensive planes that are being sold, it does shore up on the trade deficits that the US has been really rallying about overall. So yeah, this could be very significant in helping that corporate turnaround.
And how's Boeing faring in its battle with Airbus, its big rival?
Well, since Boeing suffered the twin crashes with the 737 MAX jet, it has ceded so much ground to Airbus in terms of production output and sales. And so for the last several years, Airbus has had the lead, and particularly in markets like China. And so even though this number is significant, the fact that Airbus has sold roughly 400 aircraft to China this year and several hundred more in previous years, this just helps Boeing catch up in a very critical market, the world's second biggest aviation market. And so this does help overall. And since Boeing did become outsell and outproduce Airbus last year, this really does help nail its turnaround overall.
Bloomberg's Danny Lee, thank you very much for bringing that to us. And you can read that big take for yourself on the terminal and online at Bloomberg.com. Plenty more coming up. This is Bloomberg.
I know that people are frustrated by the state of Britain, frustrated by politics, and some people frustrated with me. I know I have my doubters, and I know I need to prove them wrong, and I will.
UK Prime Minister Keir Starmer's plea for more time in yesterday's Policy Light speech, but calls are mounting for him to go. 70 out of 403 Labour MPs now calling on the Prime Minister to leave number 10. These are the betting odds from Polymarket at the moment. And as you can see, the Prime Minister is in the red. The idea that he's not out by the end of the year, now at 17, just under 17% here. The man who's the most popular to be the next Prime Minister, at least according to the betting odds, Andy Burnham, Mayor of Greater Manchester, but of course he doesn't have a seat in Parliament yet, so that can't happen immediately. But flip the board over, we can see what happened in the gilt market after Keir Starmer's speech. Yields rising on the 30-year despite his plea. Now, of course, we turn over to US CPI data. That is coming out later on today. The attention on that for markets this afternoon. A still hot print expected. And coming up today, an interview with the CEO of JP Morgan, Jamie Dimon, coming up later. The opening trade coming up next. Stay with us. This is Bloomberg.